focus back to our callers. Arohi has written to us from Bangalore. She says she's 28 years old. She has a 3-year-old daughter. She wants to plan for her education and now wants to know if she should invest in an insurance policy for her daughter. Hemant, this is a classic mistake that a lot of investors make, is of buying insurance for minors. What would you advise her if she wants to plan for her daughter who's only 3 at the moment?
Well, Sumara, the first thing I would say that I think it's always important. I think it always helps if one start planning for a goal like child education, because one, you need a very large corpus for that, and second, you have enough time on hand to build a corpus. So it always helps if you start early. In this case, the child is only 3 years old, but it's equally important to, as you rightly said, to select the right option. Clearly, if you look at a child plan of insurance company, that's definitely not the best option. I think what she needs to do is to look at a combination of a term plan and investing through systematic investment plan in well-diversified equity fund, because the time horizon is around 15 years. And the reason why this combination works well is, one, because, in this case, like, she's a housewife, her husband is working, so the husband should be buying a term plan which should be roughly around 10 times of his annual income. And what it does is it takes good care of risk management. So in case something were to happen, unfortunate incident, I think the family is financially secure. When you look at investing through SIP in well-diversified equity fund, the expenses are lower, there is more flexibility, there are more options available to you, and in terms of potential of return also, you can get better return there. So I would say that, like I said, take a term plan and then look at some well-diversified equity fund like IDFC Premier Equity and Reliance Equity Opportunity. So look at a combination of this. I think the results will be much better than investing in a child plan of an insurance company.
All right, then that's the call coming in. I hope you listened in to that advice. But Deepak Fertilizer should be up there for you. In fact, it cracked that 130 mark, and currently it's moving to the low point of the day. Currently he has a personal finance query. Hi, Priyesh.
Hello.
Hi.
Hi.
How can we help you?
Yeah, I've got 75,000 rupees from my grandparents, which I want to invest for like about 15-20 years.
All right.
So I just wanted to know which mutual fund can I go for, which can give me a good return, like about 15%.
Okay, you want to go in for a mutual fund. All right. We have our expert with us, Hemant. He's got a good chunk of money. He wants to know where should he put it. Help him out.
Well, considering the fact that Priyesh is young and he has a time horizon of 15 to 20 years, he should be investing in an asset class like equity. And I think he has made the right choice of investing in mutual funds, because for someone who is not familiar of how to pick stocks and how to monitor their progress, investing directly into stocks can be quite tricky. Since he appears to be a new investor, I think he should begin with a well-diversified equity funds, especially those that have a mix of large and mid cap, but they should be biased towards large cap stocks. In this category, I would recommend 2 funds. One is Birla Sun Life Equity Fund and Kotak Select Focus Fund. I must add here in terms of strategy that although he is starting with investing a lump sum, I think in the long run, because he has a horizon of 15 to 20 years, either he should back it up by investing through SIP some more amount every month, or if he can't do that, then as and when he has some investable surplus for the long term, he should keep adding to this. I think that strategy and a good quality fund investing in a disciplined manner will really help him generating a good corpus.
Right, more on PFC. Their other operating income is significantly lower this quarter around. Interest and finance costs is higher, expenses are higher quite a bit, and other income is almost half of what they had seen on a Y-on-Y basis. So I suppose that's the reason that the bottom line is looking muted for us, and the stock actually flat at this point. But we'll wait for some more details on that number. Let's take a very short break on that note, but before we do that, here's some more from the NASSCOM Leadership Forum. CNBC TV 18's Kritika Saxena caught up with C.P. Gurnani and began by asking him whether Tech Mahindra would be able to beat NASSCOM's FY16 guidance of 12 to 14%.